All right, greetings. This is Dr. Jeffrey Scott, and this is going to be my weekend market update using Market MRI Pro. As we've talked about before, this is a new tool that I'll be bringing to market, and I want to show you how it can streamline my evaluation. Again, my name is Jeffrey Scott, and you can get me at marketmripro@gmail.com, or a lot of you know the hgsidoc@gmail.com. Both will work. This is for education purposes only. Anything we talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. And I have tools for multiple platforms, but I'm an independent trader. And this trading app, which I'm demonstrating, will be the next program to launch, and by Praveen, who built the TradingView tool set as well. I am putting this on the Google group. It's called Top Down Trader. I'll probably post it as well. If you're interested in joining Top Down Trader, it's free. It's no obligation. You don't have to own my tools or be planning on buying my tools. I'm all about teaching people how to trade using a top-down approach, as I was taught by my mentor, Ian Woodward. And it looks like we're starting to get a good active dialogue among folks in the group. So hope to see you join. It's free. Just go to Google Groups, search for Top-Down Trader. It takes me a few hours to turn it on for you, and then you'll participate in the discussion. The Leaders Index, which is something we built about 20 days ago to identify the top stocks in the market at that time, recognizing that when this breaks, the market will break. If you look at this index of leaders, it has not broken below the 50-day moving average since August. It's been in a steady uptrend, and then it accelerated. And what we've seen over the last 5 days or so, it's pulled back to that 17-day. Now, in some ways it's broken down. You could see it's weakening by person's market capture. However, it really hasn't broken below the chandelier stop. As long as it stays above that, it tells me it's still working. But if it breaks down below that, it's a signal typically that the market is at risk of rolling over and to have caution at the minimum. And lastly, just to remind everybody, the FOMC is on Wednesday. Then we got jobless and manufacturing on Thursday. And then Friday, we got the PCE complex. So yes, we've got a bunch of earnings reports as well. But I think the Fed decision, the jobless claims, and the PCE are going to drive the markets. Everybody in the world is legitimately, I believe, expecting that we are going to see a 25 basis point rate cut. It's overwhelmingly built into the markets already. I don't expect a surprise there. I think that there's probably maybe a little bullying concern by the incoming administration if Powell was to not give him his cut. And I don't mean that to be political. And then we'll have to see. Because as I listen to the data coming out from the perspective of inflation, employment, and the economy, worst case or best case, it's mixed. And worst case, it's showing a economy and employment that up until this week's report was pretty darn resilient. So I think the Fed's got their hands cut out. So I don't think that the week is going to take a big sigh of relief with that rate cut on Wednesday. I think they're going to be looking closely at those jobless numbers and the PCE. All right, enough of that. Let's go into the app. So this here is the Market MRI Pro app. Really a great job done by Praveen. And the only thing that I really want to improve upon is the charting app, because Right now, it's perfect for me. It has everything I need in it for me. But I want to add the full set of drawing tools and indicators, and I want to make it faster. So Praveen is building that out right now. But for those who know my tools and other platforms, I got the high-low jump up top. You can see the number where it's at. So Tesla's at 100, shocker alert. I got the weekly bongo on top, the daily bongo on the bottom. This tells you the makeup of the moving averages. They're simple, 17, 50, and 200. Here's a standard volume. Then you have the dots. The line is the EMS. Green, you're in a buy signal. Red, you're in a sell. The dots underneath that, those dots, the red and the blue, are the CPR, which is another moving, I'd say, type of a moving average crossover system that I found to be very useful for looking at new signals. Then you get the usual 4 dots of Bible gap up, then volume, breakout, momentum. You have the squeeze here in the yellow line and the green dots, or I guess they're blue here. I can't tell if it's green or blue that come out after it. I think it's green. Then you have your PSAR, and then you have your signals of red candle highs and green candle lows. Now the order is backwards, but you have the OBV on top and the relative strength on the bottom. And what I just look at is the box. If the box is green, it's above that moving average. If it's red, it's below, and how many periods. Over here is the scanner section. I use the JAS list, which is a combination of the NYSE, NASDAQ, and Amex filtered for 100K and $1. It gives me 3,347 instruments. From a top-down perspective, I first go into my timing tool to assess the market. Let's go into the weekly model first. Now, if you look at the weekly model, come on. Here we go. You could see major uptrends really in all the indices, even the Russell. And remember, the Russell actually set an all-time high on this bar. It took 2 years to get there. You'll notice that up on the top of each pane is the bongo. This is a weekly WMA, and then this is the buy-sell signal. All the weeklies are still green. So that tells me that the longer-term market direction is still higher, so I don't have to be unloading all my long-term positions. This is slow. Okay, you'll notice here that on the slower weekly, even though we're still near the top on all the indexes, we're starting to show that less and less 3-month new weekly and new highs versus new lows. When we get down to this level here, around 5%, is when I expect the markets to reverse. This is a neutral picture. It's not oversold. It's not overbought. On the daily, which is going to move faster, there have been a change in that both the Russell and the diamonds actually went to a sell signal this week. This is the daily. So that really hurts my conviction. And because of that, even though I'm still directionally long, I raised cash. I sold some of my big winners, which was good because most of them were down on the week at the end of the week. And I started nibbling on some options to protect my portfolio. Nibbling means small amounts that I took advantage of the low VIX, the low volatility, to get into some of the contra ETF options relatively cheap. Like life insurance and health insurance, I'm in no rush to use them, and I hope I never use them and the markets go straight to the moon. I think there's a lot of risk building here, which we'll talk about. Notice that on the short-term daily 3-month new high, new low, we are getting close to thinking about whether or not we're going to get a short-term bottom, which is why I didn't go more than lightly into the contras. If I look at the market briefing, there's 3 different tabs. Let's start with the buckets. The buckets show me the number of stocks in each of the deciles. The Bollinger Bands are, say it's 0 to 100. The top of the band is 100. The bottom is 0. Below it is the band that I have a 0 on. Above the bands is an 11. And then I make 10 slices equally between 0 and 100. In a bear market, you're going to find the majority of the stocks, or in a declining market, are going to be in the lower half of the Bollinger Band. When I start getting 25 to 35% of the stocks underneath the Bollinger Bands, I know a reversal is imminent. So here, whether I look at the NYSE, the NASDAQ, the Russell 1000, or the S&P 1500, we see a massive shift to the left. Tell me the market's weak, but we're not at a certainty we're going to reversal zone area yet. The breadth view, and I'm a little bit perplexed here, to be honest, because I have seen on some of my other platforms some Hindenburg omens firing on the NASDAQ, and some even had one on the NYSE. Regardless, we had several Hindenburg omen fire in November, and we're still under the influence of the Hindenburg omen on both. They haven't fired yet here, and I had Praveen checking on some of the math to make sure everything was okay. Couple things to see here. Notice that as the markets were still going up, the stocks above the 17 in green, 50 in white, 200 in red started rolling over. That was a divergence. You'll notice on the NYSE, we're at the point where we start to think about a reversal, but we could still go lower as we saw here. We're below zero on high lows, advanced declines, and up-down volume, and we've now broken below the 50-day moving average. God forbid we come down to those at 200. Now the NASDAQ looks very different. It's well above that 50 still, but it has rolled over here as well. So higher highs and lower here. So we got big divergences here, and negative on the new high, new lows, advanced decline, and the up-down volume. I think this is enough to get me a little bit nervous here. And if I look at the ratios, I'm going to look at, in the upper left will be Bitcoin, but the rest of these are S&P sector ETFs with ratio charts versus the spiders. And I'm looking for outperformance. So not only is Bitcoin outperforming, but so is communications, discretionary, a little bit in financials, and a little bit in technology. What's being hammered now? Staples are not responding. Industrials, which were leading, have sold off hard. Utilities, no response to the sell-off. Real estate, when I say no response, these are some of the defensive staples, real estate, utilities. They're not going up. Materials are dead. Energy is dead. Healthcare is dead. So very narrow leadership or very narrow outperformance versus the S&P 500. Discretionary, communications, and technology. Now, I'm going to go back to the layout. And what I really like about this platform is I wanted all my breadth tools to update real time in the market with a single data feed, and I wanted them in one program. That's why I did this. Now, the other ask that I had, that was half of the reason, was Radar Screen has a limitation of 1,000 stocks in TradeStation, and in reality, it's a lot less than 1,000. We've built that trading app in TradeStation, which can hold thousands of stocks, but it's an end-of-day tool. The only tool that's going to give me the signals intraday of 3,000 stocks didn't exist. So Praveen has built this side, which is the scanner. This scanner, you can look at major indices, those stocks that have weeklies, or I like the big bucket, which is the 3,347 stocks. This is set up to allow me to do top-down or bottoms-up analysis. From a top-down perspective, I go to top-down, and you're going to see up here are 11 sectors, and here are 144 industry groups. I've ranked them by what I call my short-term momentum indicator. What comes up to the top, despite the fact it was negative like everything else, is consumer defensive, which is staples. Now I have a couple of choices what I can do here. I could double-click, or single-click rather, on consumer defensives, and it opens up the 12 different industry groups in consumer defensive, still ranked by short-term momentum, And down here, it opens up the stocks. So I see a number of the stocks that looked interesting to me right here. So I could look at the first one, which is Lamb Weston Holdings. And it's going to pull up, and I know the speed is slow on the charts. That's what we're working on right now. And this one is interesting. This is stock. Let's look at it on a weekly out of curiosity. So it's been pretty ugly on the weekly. It's had these really big sell-off bars. But what looked interesting on the daily is it took out the 200 with this belt hold candle, which was in a golfing candle going back 1, 2, 3, 4, 5, 6, 7, 8, probably about 8 candles. That is a powerful candle. Massive volume. It had a CPR signal, and it's got 4 dots. It's got a gap. Actually, it's got 3 dots. It's got volume, breakout, momentum. It's got 2 momentums in a row. PSAR is turning. It had a green candle low, another bullish signal, and it flipped on Friday for both the OB and RS. I do some research on that. ELF, consumer staple, beauty stock, below the 200, which is usually a no-go for me, but it's doing a nice uptrending channel here, and it's pulled back to the bottom, and on Friday it had a CPR, 3 dots, just out of the squeeze, and positive below. This one looked interesting to me. I'm just going down to look at stocks I looked at. Talk about how strong stocks can fall. Celsius, which was a darling, Pepsi contract for distribution and all, has really dropped, but is it making a move? Notice that the OBV and relative strength have turned up. It's moving out of a squeeze. That one looked interesting to me. So one could go down this list, and this is nothing exciting. This is staples. I mean, Diageo, doesn't jump out to me as a major growth stock. And I probably would let it break above the 200 because it seems to do badly there before I get that excited. So I could now go through and look at every one of these. I could say I want the top 3, and I could click on real estate and then financial service. So let me do one. I think I had. There's a shortcut to click on multiple, but let's go back up here to defensive. Now, the other thing I could do is click defensive, and that's going to turn that off. This is going to go away and I think be replaced by everything when that happens. Let me try that again. There you go. So I got my 3347. And what I might want to do is just take a look at the top 3. 1, 2, and 3. And what's going to happen here is, let's see, sometimes I go too fast. 1, 2. Of course, it's not cooperating, so I have to wonder what I did wrong, because it's usually me, to be honest about it. Let's see, is it still? All right, there we go. I think I had, God only knows what I did, but I can assure you it's me and why the program's still in beta. So 1, specialty retail, click on that. Should populate down here. Click on semiconductors. So 63 is going to go to a bigger number. And then click on insurance brokers. So now I've taken the 3 leading industry groups by momentum. I've ranked the stocks by momentum, and I've got Restoration Hardware. Talk about coming back from the dead. Let's look at a weekly chart on Restoration Hardware. This was once a major leader. It died. It's alive. It's come out of a stage 1. It's now in a stage 2 Weinstein move. Look at the breakout above the 200, a massive volume. And you could go back here to see a big buy signal coming in. Look down here. But this one looks super strong. But the question is on the daily. Let's look at the daily and look at what the high jump is. It's at 100, so it's a little nerve-wracking to me. AVGO, great earnings report, not just the numbers, but the discussion. Massive gap up. I talked about it on my longer video. 100 on the high jump. This thing will go higher. Wouldn't be surprised to see it at $400 by the end of 25, but will it relax a little bit? I wouldn't buy it until it took out the top of this because I think there's a good chance it goes sideways for a little bit. AutoZone's too expensive to look at. Marvell is another tech stock. It's not that 3,370 is too expensive, but most people aren't going to be buying it. Here's a pullback after the big gap up, and it's running again. This is what I think we might see with AVGO, and I'd rather wait till it gets to this point and breaks out and buy it when it breaks out above the line of the flag. And we could continue. Erie is a insurance broker. You can see insurance brokers were number 3. It's got to get above the 200. Another one I liked was Taiwan Semiconductor. Talked about it on the longer video. Nice uptrend, pulls back to the 50 here and breaks out with good volume, EMS signal, CPR, breakout momentum, and both of these are green. And then the last one I'm going to look at right now is ALAB, ALAB, which is an IPO AI stock, which broke out back here. We talked about it back here. And again, AVGO as well, big move up, stuttered here, pulled back, and then this was the bar that I would have gotten interested in, the breakout from the flag. So ALAB, again, a leader, but probably, getting extended. Why is it 0? Because it doesn't have enough bars. So let's turn these off, clicking on them. So the speed will get better when we come to market. I'm still using a demo environment, and I really want to have more customization in the charting application. And those are things that Praveen is working on. I've seen the mock-ups, I've seen the early version. It's going to be much improved. Now, I mentioned that I can also do bottoms up. And so on a bottoms up perspective, I'm going to look at long and short. So the first thing is I'm going to go into my filter. Again, I got 3347 stocks here. I'm going to drop down my filter. And I don't like stocks that have less than 500,000 shares traded. So I'm going to click on that and wait till it changes below. There you go. Hopefully I didn't click too many times. And then I'm going to click on price greater than or equal to 5. And I have to click on the other one again because I clicked on it too many times. And the volume greater than 500,000. So that narrows my number of stocks to 1662. And then I have bullish and bearish signals. So for an example, I like stocks that have 2 bars or more momentum in a row. Only 2 of them had it in this. So let's look at this. One is, whoops, where did those go? Let's try that. I know what happened. I probably hit another filter. Yep. All right, let's look at ACI, Albertsons. This was, I think, a takeover from Kroger's that's gone bad. And let's see where Albertson is. You can see a big sell-off, starting to move. Look at the volume coming into the stock. Not yet, but a break above 200 and preferably a retest. This might be an interesting stock. And one way of playing Bitcoin is with the miners, and Riot Blockchain is a miner, kind of a congested area here. And these 2 dots below are the momentum dots. How about 2 dots to the downside to look for a bearish play? Turn off the 2 days up, turn on the 2 days down. And I know we're going to see some there because this market looks more ugly than good. And we could look at some of these that I've looked at already. So these are 2 days down, Wingstop. This to me is one of the most overpriced things out there, and it's already come down $100. So why is it here? Here's the momentum dots to the downside. Again, it's come down a lot. Maybe that'll get you nervous. My guess is it goes down further. IAG is a cheap stock, but this is looking for opportunities for shorting, breaking below the 50-day moving average. BHP Billiton, an iron ore mining stock. Kind of hard to see much there. It's all over the place. Axosome, one of my past favorite biotechs. Never bought out, but it certainly got above 100, but broke down above the 50. Look at what's going on with relative strength in OBV. I'd be nervous to be holding this still. And you know who you are, as we talked about it. And then TPVG is another one. Retracement, failed, breakdown. This is one probably bounce at the 50, but a break below the 50, I might be looking at this as a short. So I have a number of tools, top down, bottoms up. I've got great tools here from a market direction. Hope you enjoyed this walkthrough. My thoughts on this week ahead are watch out. I expect the markets to go up after the announcement is done. But I don't know where we end up on Wednesday because Powell may talk us down, and then we still got jobless, and we have to also worry about the PCE. Have a great day. Join my top-down trader group. And the reason to do that, simple. You'll get a discount on this product when it comes out. And I do something called stacking discounts. For those that own my tools and other platforms, you get incremental discounts on the app as well. We'll be talking with you soon, and I highly recommend you go to the Wealth 365 event. Just look for it January 13th to 18th. Bye.